All right, before we jump in, just a quick but super important heads up. This is all for educational purposes. It is not financial advice. Digital assets are risky, so please always do your own research. Okay, let's get right to it. Welcome to the Day 104 update for PLAZM, and I'm telling you, you're going to want to buckle up for this one. This is not just another daily report. What we've just seen is absolutely historic, a complete fundamental restructuring of the entire supply. Now, you might see that prices are down a little bit today, but trust me, that is a footnote. It is completely overshadowed by the real story. We are talking about a seismic shift in the protocol's DNA that just went down in the last 48 hours. And here's the headline, right here. The liquid, tradable supply of PLAZM has just collapsed. It went from 37% all the way down to just 27%. That is a 10-point drop in 2 days. Absolutely unprecedented. We've never seen a move like this. So the big question is, how in the world did this happen? Well, it wasn't a gradual thing. This was caused by a massive, deliberate action, a flood of over 500,000 tokens into one place. This number right here, this is what caused everything else. Over the last 2 days, a mind-boggling 512,000 PLAZM tokens were poured into the liquidity pool. This single move is the catalyst for the entire supply shock we're looking at today. And you can see the immediate impact right here. The slice of the total supply sitting in the liquidity pool just exploded from 16% to 25%. That's a 9-point jump that suddenly makes the LP a quarter of the entire PLAZM supply. Just incredible. So what does a surge like this actually mean for the protocol? I mean, it's not just a number on a chart. It means liquidity for traders is way deeper. It means the price floor has way stronger support. It means less slippage when you trade. And maybe most importantly, it's a huge, flashing signal of long-term commitment and belief from the people involved. Now, for every action, there's a reaction, right? And that huge move into the LP had a direct, immediate, and brutal consequence. It absolutely crushed the amount of liquid supply available for trading. This timeline really puts it all into perspective. Just 20 days ago, on day 84, half of all PLAZM was liquid. 2 days ago, we were at 37%, and today, we're at 27%. We haven't just seen compression, it's like we just slammed the accelerator to the floor. Let's just boil it down to the most critical point. As of right now, only 27% of all PLAZM in existence is actually in wallets able to be sold on the market. This is, by a massive margin, a historic low for this protocol. And this whole restructuring hasn't just changed the numbers, it's also dramatically shifted the balance of power inside the protocol, especially when you look at long-term believers versus short-term traders. You know, remember when we were all watching that crossover event? Feels like ancient history. Staked supply, which really represents conviction, is now sitting pretty at 36%. Meanwhile, liquid supply has been shoved all the way down to 27%. It's not even a competition anymore. Staked is clearly dominant. And we're not talking about a small gap here. There is now a full 9 percentage point difference between the amount of supply that's staked and the amount that's liquid. What was once a tight race is now a massive lead for long-term conviction. All right, so let's zoom out now and look at the whole picture. If we add up all the tokens that are committed, locked up, or just plain destroyed, a whole new reality for the protocol comes into focus. And here it is. This is the new reality. 73% of all PLAZM is now in what we can call protected supply. That leaves just 27% as the tradable float. I mean, think about that. Nearly 3/4 of the entire supply is essentially off the open market. So what makes up that huge 73%? Well, you've got 36% locked up by believers in staking. You've got that new massive 25% providing deep liquidity. And you've got 12% that has been completely burned and removed from existence. Every single one of those categories represents commitment. And hey, speaking of burns, we just blew past another huge milestone. 12% of the total supply, that's almost 658,000 tokens, are gone forever. And get this, over 500,000 of those were destroyed in just the last 20 days. The burn rate is accelerating. So what's the final verdict on day 104? It's really simple. This is the day the protocol's supply structure finished a complete and fundamental transformation. Let's just run through the checklist of achievements from this event. Liquid supply, historic low of 27%. Check.
LP, a massive surge to 25%. Check. The crossover gap, now a whopping 9 points. Check. Protected supply, dominating at 73%. Check. And the burn milestone? We crossed 12%. It's just a clean sweep of bullish structural changes.
And this all happens while other key health metrics are rock solid. We've officially crossed 12 billion total shares, the vault is holding strong over $500,000, and we are now just 14 days away from day 118. The protocol is heading into this final stretch in the strongest structural position it has ever been in. Period.
So I'll just leave you with this. 27% liquid, 25% in LP, 36% staked, 12% burned. What does that all mean? It means the tradable float has been crushed. The crossover gap is 9 points wide. Protected supply is a dominant 73%. This is not gradual change. This is transformation. Day 104 will be remembered as the day PLAZM supply structure fundamentally and maybe permanently changed.
Thanks for tuning in for this historic update. Remember, all this content is just for your information. Digital assets are speculative, they involve a high degree of risk, and you could lose your entire investment. Past performance is never a guarantee of future results. Stay safe and stay informed.